All right, today we are in the chum bucket with me and my good pal, B-Rad, the one and only. Brad is a mortgage lender at Total Home Lending, and we are just going to be talking in front of these cameras to do anything we possibly can do to try to make real estate even remotely interesting. So that's what we're doing today. I would be doing this with my best pal, Kyle, but as always, he's a farquad and never answers his phone and never answers his text messages. So you were second choice.
Always flaking.
Always flaking. Especially on me, I think.
Yeah.
So yeah, you're my second choice.
Hey, I'll take it.
Yeah.
Oh.
Yeah.
Ain't nobody flaking.
Oh!
Don't call me Lord Farquaad.
You came and brought a Waterloo and didn't bring any Waterloos for anybody else?
Yeah, dude.
My apologies.
Okay. All right, so what we're talking about today is common misconceptions with real estate and specifically mortgage lending.
Okay.
You good there?
He's got the microphone.
Yeah,
you gotta say something.
he's hoarding the microphone. All right, First one. You should pay off all your debt before you apply for a mortgage.
Not so much.
That's his question for sure.
For sure. So, yeah, a lot of people think that and they hesitate to even apply for a mortgage. But that's not really the case. A lot of times, like the credit karmas and stuff people use to know what their credit is, might not even be accurate. We're talking like 100-point swings. Like my credit is 550 and then I pull it and it's 620.
Dude, mine was like 130. My FICO score from my actual, my FICO score from my Credit Karma score.
Yeah.
130 points.
A lot of people surprise themselves.
Yeah, and it goes both ways. I've seen it over 100 points off, both good and bad. So getting that looked at first, instead of just going and paying off $3,000 worth of collections or debts you might have, that might be better spent for a down payment versus using it to pay off debt, which may or may not even improve your position to buy a house.
Yeah, that just depends on debt to income ratio, right? So it's good to get it checked out first.
Well, kind of.
Dr. Brad.
Well, it would be good for your debt to income ratio, though.
Well, yeah, I'm just saying that.
Yeah, it could help your debt to income ratio if you needed it, but that's why it's important to check first. If you needed to pay down those debts to make your debt to income ratio
That's what I'm
better,
saying.
then maybe it's a good idea.
So then what you're saying is to actually go out and buy a Duramax, right?
Yes, that's exactly
A diesel.
what I said. Big, huge diesel truck,
and a boat, too. You got to have something to pull with it.
camper, and all that.
A fifth wheel, you can pull a camper and a boat.
There you go.
All right. So pay off your debt. That's what Brad said. He said pay it all off.
100%. You should be debt free.
Unless you shouldn't. All right, the next one. I don't want to get pre-approved. I'll just start looking. We'll get pre-approved once we find the house that we want. And there's 13 other buyers that want to buy it.
You guys love driving and showing 30 houses to somebody who may not even be approvable, right?
Yeah. Early in the career, it was kind of like, just give me everything I can get and let's just go. And then you learn over time as well as people you're working with.
Yeah,
It's not a smart move.
I don't necessarily really care about that. I mean, because I feel like I can kind of see it if it's, if they're going to be not a deal anytime in the future, you kind of learn to figure that out. But
If you know some background credentials.
right. You just start to feel the vibes
if
in the room.
somebody you have no clue who they are, you're just learning about them.
Yeah.
Then you definitely
Yeah.
have to kind of push for that.
In my world, I don't want to make you guys waste your time away from your families or doing whatever, and I don't want the client to waste their time or resources.
Well, or when you find the house that you love and want to buy, you haven't even started. You don't even know if there's headwinds, hurdles, full-blown brick walls in the way, and it just makes it miserable. I don't know if you've ever seen that before.
Yeah, or you're, it's highest and best by a certain time, and they're not even pre-approved yet, and we're just trying to rush into everything to make an offer.
It's a really good way to lose out on the house that you might you'll be devastated to lose.
It's a really good way to bum your wife out.
yeah.
No doubt, which is
Be in
probably
the
the biggest
doghouse.
detriment.
Yeah,
of all
that's
these
the
things.
worst thing you can imagine. So anyway, I mean, I don't necessarily personally care for me because generally I'm probably not going to run all over God's creation if I don't think there's a strong chance that they're going to be a qualifiable client. And for me, but also for them. I don't want them to have to drive all over. But more than anything, I don't want them to start looking for a house before they get pre-approved, knowing what I know, and then getting to a point where they find a house that they love.
Right.
Everybody else is going to love the same house, and now they're scrambling, putting themselves at a disadvantage, trying to scrape up docs and stuff to get a pre-approval while somebody else is, offering a appraisal gap guarantee or something like that, and we're just on our heels.
That's not even to say the fact that they got to figure out what their budget is, what they're comfortable with, what loan product they're going with. Because if they're going with a government insured loan program versus like a conventional style mortgage, we got to worry about the overall condition of the house. Mm-hmm. There's way too many factors to just go start looking without knowing, what the framework of our offer is going to be.
Yeah, there's a ton of times, unfortunately, where people find a house that they love, get it under contract, and then they see their payment for the first time after that. And that's not good for anybody. You're under contract already. All
What
of a sudden,
their estimated cash to close is at that point in time.
You didn't know what the property taxes were or whatever, and the first time you see everything put together, oh, this is my payment?
Yeah. Then we're trying to get out on inspection.
Right.
Yeah, we're just scrambling to find a contingency that'll actually play.
Oh, we waived inspection.
Great. Oh, there's a $10,000 appraisal gap guarantee.
Yes.
The vinyl siding is warped from the barbecue where they had the grill set up, and we'd like out of this
We
deal.
found it on the final walkthrough, and so, yeah, this isn't going to work for us.
Yep, pretty much.
And we'll want our earnest money deposit back as well.
Right. Yeah, not good for anyone.
Q arbitration. Going to wait until rates drop. What's your advice on waiting for rates to drop?
Marry the home, date the rate.
Right.
That's what I always say.
I've been dating her for a minute, those people that
I
have been
know.
waiting.
Yeah.
That's a long-term relationship sometimes. But it is a good idea to think of it that way. Like, if you were waiting for the perfect time, it's just never going to happen.
Yeah.
Like, timing the market is so difficult.
Yeah, well, it's impossible. Like, statistically, literally, it's impossible. And if you think that you did it, you got lucky.
Mm-hmm. Pretty much. Yeah, rates, the last projection I saw, which just came out in November, most of the experts were projecting them to be like in the mid to high sixes still going into next year.
Right, even though that's down. Right. And I think they'll go down, I do, but I don't think that they're going to tank like they did.
No one is projecting that. If it happens, amazing. But if that's what's keeping you from buying a house, I mean, you might be waiting for a long time.
Yeah. What another thing some people talk about, but nobody who doesn't know what they're talking about, which is like 80% of everybody.
Right.
If rates go down, it's a double-edged sword because prices are going to go through the roof because demand is going to get into a rocket ship and shoot into space.
Yeah. Yeah, it was
We
great.
need some more metaphors like that in this podcast, but a little bit better.
That's
Used
right.
to you even saying even fancier ones. Than
Yeah,
that,
but
so.
we're trying to keep it PG too.
Right.
That's
I
difficult.
almost,
Yeah,
I almost swore once and I stopped myself.
If you do swear, Kevin said he'll bleep it out.
Yeah,
so I'm half tempted
I'll even
to test
pixelate your mouth
I'll
too.
test it right
Yes.
now. I mean, it's gonna.
Hey, wait, before you do it, let's all just say the most vulgar things that we can say. 1, 2, 3. That felt great.
Got him out.
But yeah, no. If you decrease the amount that money costs to borrow or to purchase, then you're going to increase the amount of people who want to buy or purchase it. Just like gasoline. So if gas prices go way down, every single person and their brother is going to be lined up at the gas station. Exact same way if rates go way down. But what that's going to do is it's going to create an imbalance in the supply and demand equilibrium, and then there's going to be way, way more demand than there is supply, and that is going to make prices go through the roof.
Right. And you remember just a couple of years ago, all the appraisal gaps, and people were buying houses sight unseen just to get offers in. I don't know the largest you guys saw. The largest appraisal gap I saw, people were offering $75,000 over asking price.
I personally wrote a $50,000 appraisal gap guarantee, but I also did see one on a deal that I had to take over where they put unlimited. There is no limitation. Yeah, and it came up. And yeah, it's a long story, but it definitely came up.
Wow, I had the same. Well, the
shout out Josh Brewer. You know who you are.
The $75,000 was an unlimited appraisal gap too, and it came in light, and it was quite an ordeal. We had to get. Luckily, that appraiser we didn't feel did a great job, and we got a new appraisal and got within a $15,000 gap.
Ooh, you spanked him.
But
that's hard to do.
Yeah.
I wouldn't call it spanking. I'm extremely respectful, but I've been able to pull it off a few times. Just not to toot my own horn, but
yeah.
It worked.
Turns out not many professionals like them.
No, they don't. They don't like being told they're wrong, and they especially don't like when you prove that they're wrong.
Right. Yep.
So okay, moving on. Don't wait for rates to drop. If you need to buy a house, just buy a house. Like we always say, buy the house, or buy the sales price. I don't remember what I was about to say. Marry the home, date the rate.
Date the rate. This microphone's not actually plugged in.
Get it closer to your mouth.
Marry the home, date the rate.
On to the next one. If the seller really wants to sell, then they'll pay whatever I ask for. Ooh. Kyle, you ever seen that?
Wait, say that again?
If the seller really wants to sell, then they'll pay for whatever I ask for.
Sounds a little silly.
This sounds like Uncle Buck.
That's Uncle Buck for sure.
That sounds like Uncle Buck.
Get Tom Holly in here right now and have him. Why isn't he here for this moment? We talked about it on the first episode.
I had to cut that out though. You remember? I got the B-roll. We could make a blooper out of it. It was we love Tom
Holly to answer the question as Uncle Buck, and you can incorporate that video clip into this real quick right here. Pause. Right there.
He's got an Uncle Buck.
I'm probably not going to do that. Uncle Buck is a fictitious character that we made up based on all of the
Uncle Buck
family members that give horrible advice.
Yeah, I thought you were talking about John Candy. What's his name? John Candy, Uncle Buck.
No. Uncle Buck is a fictitious character that just gives you horrible advice everywhere because he bought a house in 1986 and he's really smart about buying houses in 2024.
Yeah.
But yeah, so here's the deal. Most often, sellers don't need to sell. And they don't really want to sell to somebody that they don't want to sell it to. And they don't engage in transactions that they're not comfortable with. So when you're asking for repairs and discounts and credits and those type of things, you have to be very, very careful not to turn the seller off of the deal. Mm-hmm. And you have to be effectively willing to lose the deal over anything that you are asking for because they might be turned off and they might just squash the entire deal altogether. So it's one of those things we do. I mean, I don't hear it a lot, but you do hear it. And especially when they got people in their ear that are telling them, it's going to need this, it's going to need that, and it's going to need this. Whether it does or doesn't, I never know. But right. At the same time, you need to understand that if you truly do believe that, then you need to know that the seller probably isn't going to be outrageously interested in the transaction anymore. Right. And very seldom is a seller just desperate to sell.
Mm-hmm. Yeah, true. I usually put this right in you guys' court right at pre-approval time. Sometimes tends to be more first-time home buyers might ask for seller contributions for a property. I let them know what the limit is because each loan program has a little bit different limit. You can ask for up to this, but you need to talk to Kevin or Kyle on whether or not that makes sense given the market or how hot that particular property is.
I knew these lenders were just trying to pass the buck, dude.
Hey.
I knew it. He's like, "Ooh, that's the tough question. You're gonna have to ask Kyle about that."
Well, I could go in there and tell them, hey, you could get 20,000 in seller concessions on this one. It's allowed.
Yeah, they have to sell.
Right?
If they really want to sell, they'll do it.
Yeah, they want you to get out of this out of pocket with $0.
Yeah, they want.
Sellers are really, really keen on that.
Yeah, do you have anything to say about that, Kai guy?
No, let's move to the next topic.
Moving on. Okay, let's see. What do we have? Any other good ones? I can buy a fixer upper. I can buy any house I want with a government insured loan.
No,
Or-
not
or-
without that.
Afraid not.
Not without the 301, what am I trying to say?
203.
203K. I kept thinking of 401K in my head for a second. Yeah, the 203K, but that's a pain in the ass itself because then you got to pretty much find a contractor who can itemize and bid out every single thing that needs to be done.
Yeah, that's what people don't realize. It's not like we're hiring Uncle Bob to put some cabinets in and my dad will do the
roof
the
and
flooring.
yeah.
And
And
all
then the
this.
appraisal's it's got to come in above not the purchase price, but
They have to
plus
repair.
all of the renovation.
Yeah, we call it the as completed value.
Yep.
And that's king. So if it's going to cost you $80,000 to get this house what you want, but it's only adding $50,000 in value to the purchase price, appraised value, then there's going to be a gap that you're going to have to cover out of pocket.
And try pitching a renovation loan offer to a seller in a market where there's other buyer demand.
Yeah, more than likely.
Yeah.
I sold one house in over 10 years. Sold one 203K loan. Herbert Henry Dow and his wife, Grace Dow, lived in that house.
That's pretty cool.
In the mid 1890s, when before the Dow Chemical Company was the Dow Chemical Company, it was the Midland Chemical Company, and he got fired from his own company.
Herbie did?
Old Herbert, yeah. And then he went back to Cleveland after that, from when he lived in this house, and then he came back to Midland, started the Dow Chemical Company, and built his house where it is now. And his backyard was Dow Gardens, and he used to own all the property, like where the hospital and stuff is, and like where Center for the Arts, and obviously where the library. That was all his property way back in the day. He had like 600 acres.
Dang.
Isn't that cool? Yeah, he lived in 5 total houses in the entire time that he lived in Midland, and one of them
One of them you sold.
I've sold
203K.
Yeah, and you did family photos in on the porch of that house.
Oh, yeah.
Herbert Dow lived in that house.
Yeah.
Would you
I
look
know.
at that?
Very, very cool. Bought it with the 203K loan. It was utterly miserable.
Yeah, I mean, you got to have a contractor. They have to have their sworn statement, a breakdown of everything. Everything's got to be approved. It's got to be done in a certain amount of time. So yeah, it's definitely not just, hey, I'm going to buy this fixer-upper and do it myself type loan program.
Well, and a lot of the time, at least with the government-insured loans, specifically FHA, we'll see that, generally, and I don't want to blanket a statement, but a lot of the time, this is a first-time home buyer. Yeah. So a lot of the time, these aren't super high-end price ranges. And so, a lot of those houses need repairs or in rougher condition. And so if you're an FHA buyer, a rural development buyer, any of these government-insured loans, you got to ask yourself a couple of questions. First one is, all 6 operating systems of the house, do they work as they should? Can you name them? 6 operating systems, go.
Roof, HVAC, electrical, windows, foundation, plumbing.
Yeah.
Nice.
Plumbing, the roof, the windows, plumbing, the electrical, the foundation, the heating and cooling system. Those are the 6 operating systems. The standard for the FHA is they got to be working as they should, right?
Correct.
The other one is there any health or safety hazards? So anything like mold, mildew, freaking screws sticking out of the wall, open junction boxes, sketchy electrical, those type of things.
Yeah, peeling paint.
Don't
Gotta have-
forget-
Peeling paint is the pain in the butt because it's seen as a health hazard. But yeah, if
It's
you
almost always present
yeah.
Right.
somewhere. And I just got through a deal. This whole pool fence had to be done, and then I just had a VA one where we had to do all the trim around the windows on the outside, all kinds
Yeah,
of stuff like that. Had to replace the mudroom to the garage door to be a fire-rated door. You know, stuff like that. Handrails have to be put up. If you think your grandma can't get down it without a handrail, there probably should be one there.
GFCI outlets by sinks and water sources.
I heard that that was changed. Did you hear that?
I've not heard
I
that.
talked to an appraiser too. I think the way he put it to me was that it's basically up to that appraiser if they feel like it's a hazardous situation. But I'm pretty sure
It should be a guideline.
you should pull that up on your thing so we can. This is a good screen recording. Did FHA remove the GFCI requirements?
According to the Google machine, the FHA does not require ground fault circuit interrupters, GFCI outlets, but the National Electrical Code, the NEC, does. So what does that even mean?
So we're on to something,
Here we go. Here's a HUD standard.
or I'm on to something. I'm learning you something, and I'm relearning me something.
So there you go. Yeah, you heard it from the Google machine. Do you believe it, Brad?
Well, first you heard it from Kyle, then you heard it from the Google machine.
Okay, one last common misconception before we get going, because we're having camera issues with by far the most expensive and best camera of all the cameras that we're using.
Doesn't have an internal fan system. Sorry. Keep going.
Okay, but the seller bought it for. This is my favorite
Did
one.
we go over this in the first one?
I don't know. Yeah, kind of.
Yeah, the seller bought it for this, so that means they have so much equity that I should be able to squeeze them for a good discount.
Yeah, they just bought it. They bought it 5 years ago for 180. Why do they want 220 for it now?
Doesn't matter.
It doesn't matter when the market changes, comps rearranges the perceived market value, and it goes like this. That's right.
Exactly.
Dude, that was
Keep those mics up, son.
that was platinum lyrical.
Yeah. And, yeah, if you're selling your house, you want to know, the first thing is what is it worth? And if the comparable data shows it's worth X amount, we're going to try to sell it for that amount. If a buyer comes in pitching me significantly lower than whatever that amount is, I'm going to shoot my shot a little bit longer or make a price adjustment if I don't get anything in a reasonable amount of marketed time.
Yeah.
How do you feel? Is that right?
Yeah, in other words, how much the seller paid for it has nothing to do with how much they're going to sell it for.
No, my house when I bought it, it's already worth $100,000 more than
Yeah.
that, just because of market appreciation, not because of anything.
Mine is
I
just
did.
because of the chum bucket.
Yeah, I mean obviously, but that doesn't mean I'm going to sell it to you for what I bought it for.
Yeah. As a matter of fact, I'm most definitely not going to. Oh,
Whoa!
ooh.
She doesn't even go here.
What the heck was that?
All right, let's end this.
That was Kevin's TikTok.
Let's end this deal with some TikToks, and we'll just watch them and react to them.
Have we? Wait, is that the last topic?
Yeah, that's the last topic of all the common misconceptions.
Have we said enough?
I had
feel-
one that I wanted to
Oh.
hit, but I didn't know what was on.
Bring
your
it
list.
on.
Hit it
I'm
up.
just worried
All right.
about Kyle's camera.
Here you go.
Piece
Ready?
of crap camera.
0 down means I can get a mortgage for free. No money down.
That's a good one because that is not true. There's a cost to purchase the mortgage, Brad.
Yes. Although there are some programs that offer 0 down, like the USDA Rural Development, it doesn't mean 0 out of pocket. There are still fees. If you want a home inspection, which isn't part of the loan, but if you want a home inspection to get the house checked out, what do those go around? $200 to $300 these
Let's say
days?
four.
No.
Let's say four.
Let's say,
4 to 5. depending on
yeah,
what
300 to 500.
Yeah.
Boom, out of pocket right there. Has nothing to do with the
Yeah.
loan. A lot of times you have to pay for your appraisal to get going. $500 to $600 right there. And then there's your closing costs, which are outside of down payment, which a lot of first-time home buyers forget about.
Okay, you guys want to end it with some TikToks? Here's the first one.
Azikan and Dushnu, Arabian and Gunun and Wudu, Narzibanipto, a Shikan and Nada, Rama doodoo. Zikin and dooshnoo. Arabian and goon and voodoo.
On to the next one.
It's true.
Underwriters are the evildoers of the real estate business.
I would say probably 4 minutes.
Feel
Oh, yeah, this is the guy I pre-approved last week.
4 minutes.
This extraordinary creature is half blind. This is just about as fast as it can move. Extraordinary creature.
All the loan processors are going to be sending
My
Brad
processor is awesome.
sending Brad a passive aggressive email.
We treat ourselves to clothes. Treat yourself. Fragrances. Treat yourself. Massages. Treat yourself. Mimosas. Treat yourself. Fine weather. Treat yourself. We treat ourselves to
With the COVID, excuse me, with dealing with everything we have to do with, look, if we finally beat Medicare, excuse me, with,
what the fuck is this piece of
This is your man. Look at the screen. and that's what you're going to settle for.
I'm gonna stick this out.
That might be the last one.
Bye. I'm somebody's bitch. I'm somebody's bitch.
Now that Kyle finally got his camera working again, that's it because your camera doesn't want to do this anymore.
Okay.
So
wrap.
Thanks for
then-
watching.
Yeah, that was good. That was a good time.
High fives, 3
Thanks for the
all around.
invite.
1, 2, 3. Yeah. Ah, my shoulder.